We have Mihir Vora, CIO Trust Mutual Fund, joining us now. Mihir, always a pleasure speaking with you. Thank you so much for taking out the time. That 26,000 is the sensitive level where we touch and come back, and that's exactly what has happened. 26,000 was touched, and now we are around 80 points down from that level. How are you reading the markets right now?
Hi, good afternoon. Thanks for having me. I think we are following both local and global cues, I would say, at this point in time. So as you know, the US had a good news that the government lockdown finally has come to an end, and they hopefully should be back to business. So that's created a leg up in the US market, especially the tech stocks, which had corrected for quite some time. So that's one, and there are indications that we are probably we are closer to a US-India trade deal than before. So that's also added to the positive sentiment. Question is whether FIIs will start buying on the back of this news on the trade side, and of course whether the FIIs will take cues from the global market. So that's one. Locally, I think we had the Bihar elections, and the polls seem to be in favor of the ruling coalition. So that kind of also seems to be helping the sentiment in the market. So I think the markets had consolidated for quite some time. And we did have the mid caps outperform in any case. The results have been good for the mid caps. But I think now the large caps are also taking cues from the global and local developments.
Mihir, in terms of the sectors, what are you looking at right now? We've seen realty rally, we've seen metals also rally, we're also seeing some rally in defense, but today it's seeing some profit booking. Any particular sector that you have picked up this particular quarter considering earnings?
So we continue to be positive on the domestic plays, especially on a relative basis. I would say that we are more hopeful about the financials, especially the banking sector picking up, because that's the largest segment in the market, and that can really take the market to the next level. And more importantly, we also did see the banking sector lagging for the last couple of years, though now it's climbed back to its more or less to its previous level. But it's been after a long time. So there has been a reasonable amount of consolidation in the banking segment. And if that segment performs, it should drive the markets up further from these levels. So that should be a key driver for the market. And the good thing is that because of this consolidation, the valuations in this segment, especially the banking, both private as well as the public sector banking, valuations are quite reasonable. So I see a good case that if the markets stabilize and start the next leg, then it could be probably led by the banking segment. And of course, we continue to be positive on the physical asset creation space, the space in the infra, utility, capital goods construction space, where we believe that that will be the key growth driver for the economy, given the private sector capex expectations, government push infra, and the government push towards PLI, etc.
Here you did mention that FIs should now pick up the cue from global markets as well as the kind of micro developments that have taken place in India, the government push that you were talking about, consumption as well, private capex also picking up. Do you think that this is sufficient enough for FIs to come back to India?
Yeah, I think so, because one of the reasons why FI sentiments has been subdued, of course, was relative valuations. So India used to be perceived to be relatively expensive 1 year back. So that probably was one reason why FIs are not coming back, or FIs didn't come in a big way. Second is, the India-US trade deal got delayed quite a lot. So that also makes people a bit tentative about the timing and the uncertainty surrounding it. So that's the reason. So I think valuations, as I said, have corrected. Time correction has happened. We have had one more year of earnings growth. So valuations have come to normal levels. And if things come back on track in terms of the trade relationships with the US, I think there is no reason why FI should not look at India again.
All right. Thank you very much, Mihir, for giving your views on this.